All right, good morning. Let's go over today's trade plan. So in Friday's recap, I covered the idea that it's more likely that responsive buyers are going to be active here near support, and we'll probably get a rotation back up. So that idea is already played out in the overnight session, and at this point, the market doesn't really have directional conviction one way or the other. It can really either move back up within range or it can test lower, find buyers, and then start balancing. So there's really no expectation of a big sustained directional move. It can still move lower or higher, and this is very much middle of range. And for that reason, the bias is neutral. We're not leaning heavy bullish or heavy bearish here because we're trading in the middle of range. And on the econ front, we have the pending home sales index out at 9 a.m. Central. And ahead of that, we can get just some continued balancing in the overnight range, or a little bit of continued balance within Friday's range. But there's not this expectation of a big directional push. The context is very different today than it was on Friday. So right now, we've seen that responsive buyers entered at that 54 to 56 area on Friday, and then at the prior VPOC 1858 in the overnight session. We are going to be watching the other markets to make sure that strength is continuing, and in order to really get a confirmation that buyers are really stepping in here in a major way, we would want to see NQ getting back above 35.45 to 35.50, and on TF we want to see it trading above 11.27 and 11.31 to 11.32. Those are important spots in TF, and if those markets can get back above those levels, then at least we would have more confirmation that the buyers are stepping in here. Also have to keep in mind that relatively, ES has been the stronger market and leading the upside within this, recent balance over the last couple of weeks. So if those markets start showing some strength, then ES could go back up towards the naked VPOC at 70.75, open gap 73, and then potentially test the initial resistance zone at 76.25 to 78.75. But because we don't have that big directional conviction and momentum set up in the market so far, it seems like if we head higher, we'll still end up attracting sellers at resistance, and if we head lower, we will probably end up finding responsive buyers and then balancing in a range. It's just a matter of where we balance. So as long as we can hold above that initial support zone, 54 to 56, and NQ can hold above 35.16, TF can hold above 11.16, those are really the key levels for buyers at this point. If those levels can hold, then we can still balance within this recent range. If that level breaks and we start getting any type of liquidation move below initial support in the S&P and below those levels in NQ and TF, then you have to be a bit more cautious on the long side, because then ES might head down towards the naked VPOC at 46.25 or the 44 to 45 support, and then find buyers. So we have support in the middle as well. We have 48.5 to 50.5, but if we start getting a liquidation type move where the other markets, NQ is breaking 35.16 and moving lower on momentum, TF is breaking 11.16, then we're going to have to be cautious on taking any long setups, because it could be a little bit of an extended push before responsive buyers enter the market. But if we get a straight line type push from 54 all the way down to 44.45, that'll be a decent long setup, which should provide a 5 to 7 point bounce. But right now, heading into the open, the buy side is still keeping it together, and like I mentioned, it can just bounce right over here, move a little bit higher, find sellers, move a little bit lower, find buyers. So there's not that big directional conviction, and for that reason, we have to be more selective on our trade setups today, be more aware of the trade location we're getting. If we're not getting the ideal location, then skip the trade, right? Be patient. So the context is different than Friday, and that's really the main thing to keep in mind, that today we do have to be more careful in the market because it can balance within a wider range, and it may not hit the upside target you have. It may not hit the downside target you have, right? It could stop a little bit ahead of that, and it can just kind of churn and rotate here. So so far that idea is playing out. We're seeing decent volume in NQ, but ES and TF are showing below average volume, which would again support the idea of the continued balance scenario. So we'll keep an eye on pre-market support, pre-market resistance, but knowing that ahead of econ we could fill the gap below, and still it wouldn't really affect the market structure by too much. The buyers could still hold it together. So far heading into the open, relatively neutral bias, but with the understanding that we have found some decent buyers off of Friday's low and Friday's VPOC. So with those ideas in mind, let's just keep the econ calendar in mind as well, and let's see how well the buyers are holding it together post econ, and then take it from there.